Welcome to TheoTrade. This is Don Kaufman. It's December 4th, 2019, and you are watching the TheoTrade evening video. Is the market out of danger? I think that's really been the topic of conversation for this entire trading session as the S&Ps have effectively rallied back. You'll see in this overnight session right there, the S&Ps rebounded predominantly once again on, well, what else? Trade war. So the trade war, it's on, it's off, it's so on, it's off. It's you, it's not me. I've heard it all before. But the question at this point isn't so much about the trade war and so forth. It's more or less, is the market buying it? I mean, and really, are we out of danger? And that's what I am going to try to answer here in the next couple of moments. You know, first and foremost, you can take a look at the S&Ps a little bit here. And in terms of the S&P futures, yeah, we're still down on the week, but there's one, really alarming aspect, and that happens to be the elevated volume. Even in today's session where the S&Ps finished up a whopping 18 handles, you still have quite elevated volume. So you have to recognize and respect the fact that, first of all, well, that volatility hasn't necessarily just subsided, right? And that is also based on the fact that the ranges that we've seen in the last three trading sessions have been rather extraordinary. Now, if you remember back to just this weekend's kind of video, I was talking about that's it. Markets, they're ready to rumble once again. And that's precisely what we're seeing is quite a bit of trade action here. I mean, listen, we're even in the after market session here. Obviously, the S&P futures are open 15 minutes after the cash close, and they're still rocking people to the downside. Again, volume is still rather heavy in a marketplace that's going to be open just another few moments over here. I mean, again, in the after-hour session, we're still doing 3,000 to 5,000 contracts per minute. Let's get down to it. One of the first things that I wanted to cover here is we're on the edge, people. What's the edge? The edge of the expected move. It's probably one of the most important premises that I can drive home to you in this particular trading session. All right, let me actually zoom into this on a week-to-week basis. We always continue to elaborate about these expected moves. The expected move. All right, what did it really break down to? The move to the upside or the downside this past week of trade was $37. All right, so we're expecting a $37 move. Okay. This week. Now, obviously, part of this week is already past tense, but on a $37 move, okay, that makes kind of that key inflection point to the downside right around, okay, 31.04. And we're hovering right now just north of that. Now, one point that I want to make is this is the SPX, the mother of all products. And the SPX, it closes right smack at the bell, right? 3 p.m. Central Time. It's it. It's over. But the interesting aspect is if you take a look at the S&P futures, okay, after the bell, okay, they've actually driven down. And right now, we're about to close pretty much on the button. And on the button is somewhere right around, well, 31.04. So talk about edge of the expected move. Why does it matter? Okay. Oh, it matters. All right. And I cannot elaborate and stress this enough of why this matters. It has everything to do with hedging activity. Those, okay, that are in considerable size positions, what happens to them without going into too much detail in the professional trading world is there's this monumental amount of risk, okay, inside of this expected move. So again, you're looking for this $37 move higher or $37 move lower. And this edge of the expected move is kind of the happy place, right? Whether you bought premium, whether you sold premium. If you're right on the edge of the expected move, you're not really taking much risk and much heat at that point. But coming outside of it, all of a sudden, dynamic hedging has to kick on. And to, extrapolate a little bit on that, if the marketplace starts to head down a little bit, traders have to sell into the selling, meaning that if we cross outside, okay, of 31.04, we have to turn around and sell the marketplace quite hard. And that's how you actually get these wild and wicked outside trading sessions. It makes the next two trading sessions of critical importance. And I'm going to elaborate more upon that. There's always a higher probability of closing inside of this expected move. And because I don't want I don't want to leave you with the impression, okay, that I'm all bared up. I'm all bared up with no place to go. It's not about right now being bullish or bearish. It's about understanding, okay, the risk that persists right on the edge, which again is 3104. And your understanding of this is critical in a situation, okay, because it's this, huge inflection point for the markets. I mean, effectively what I'm saying, we trip a little bit down and we go down big, and we start to then proliferate. A much more substantial down move can occur if we crack outside of it, right? There's a higher probability, of course, that we're inside of the expected move. Nevertheless, a crack outside would lead to some heavy sell side activity, and that, people, is what you need to be aware of. That's why I wanted to start this evening with talking about being on the edge of the expected move. Next thing, financials. They're just firmly in charge right now. That's what's driving the flow. That's what's driving order flow out there, are the financials. So the financials, it's been a wild week. They got hit hard early in the week. They've rebounded. All right, when you start looking at this on an expected move basis, I'm actually going to put on auto expected moves. You'll also notice that the financials, they're just hanging on right now to the edge of their expected move. And ironically, the financials themselves have also, they've kind of backed off a little bit more here in the extended hours trade as well. So you be mindful of that. I'll continue to look at the financials, but what is so imperative to understand, okay, the financials are driving the order flow to the S&P 500. What's driving the financials? Bonds. Okay, bonds are still net. Okay, they're just had a wild week. Where do you want to begin in terms of the bonds and the bond movement on this week? I mean, they are ever so slightly down right now on the week, but give it a few minutes. The bonds, they've been all over the place after yesterday's wicked move up. Speaking of a wicked move up, I took you through a bit of a bullish spread in the TLT, All right, taking you through the life cycle of the trade, specifically inside of the TLT. We opened up the TLT trade for a 98-cent debit, closed it for $1.30. We're out. We're out of the contest. We made more than 30% in the first 3 trading days of that in-out spread. Therefore, we're in, we're out, we're on with our life. And ironically, the bonds have backed off once again. And because the bonds have actually backed off, it may even give us another opportunity to get into another bond spread. We'll look for it here on this Thursday or Friday. But once again, the financials, you just have to recognize, the financials are firmly in charge of order flow here. If the financials, are a little bit worrisome, well, they should be. Listen, there's no directional bias per se that I want you to try to pick up in the financials right now. Meaning that if I look at the chart, we were down and then we bounced back up. There's nothing in there, that is going to tell you the bias of those financials in the next 24 or 48 hours. You don't have the jobs report that's coming on Friday. None of it, per se is going to help. What will help, is an understanding of what the implied volatility still says. And one thing that really stands out to me, people, the financials, they still have a 40+ cent, expected move. That's what I was talking about. Like, XLF vol, it's elevated to the tune of over 40 cents with 2 trading sessions left. Most weeks don't see that kind of movement. So you have to realize, is the market out of danger? No, there's no chance. We can go up, we can go down. Just the volatility alone in the financials is screaming to you, get back. We're still Mr. Toad's wild ride. Next on the docket over here, correlations are extremely high. What are the correlations we're talking about? Markets have effectively been correlated, to the upside or the downside. This is also something that I covered on the weekend video. We've seen kind of this correlation breakdown where every day for weeks we were coming in. Literally for weeks we were coming in and trading. And what was the advanced decline line? For those of you that do watch us on a day-to-day basis, it was a slop fest. It was 50-50. It was 60-40. That's kind of what we turned a slop fest. All of a sudden, we've got assets that are correlated. So correlation, what does that mean? It means traders, they're going to fire into the S&P Futures. They're going to fire into the financials first and ask questions later. Everybody else follows along. Now, this is also kind of interesting. A little defection, if you will, in the marketplace. The NQ and the RUT, they're lagging the markets today. If you took a look on a percentage basis, and that's always what I'm looking at. I mean, it's statistically significant to look at, percentage basis. I mean, look, you're up what? 0.7% on the S&Ps. Nasdaq lagging a little bit. Okay, Dow lagging a little bit. The Russell, again, kind of almost, on par with what the S&Ps are doing. But the reason I'm pointing out the Russell and calling the Russell like lagging a little bit is because the Russell, surprisingly enough, it's filled with these kind of mid-cap, financials. But the Russell is actually lagging, okay, the financials, which was surprising to me. And last but not least on this front, you have some massive market caps that are defecting. Which ones am I referencing? What's defecting in this marketplace? Just look down the list, the usual suspects. Apple obviously had a decent day. Netflix. Now, I wouldn't put Netflix in a category that's going to move markets. Okay, but think about this for a second. When was the last time you looked at the S&Ps, okay, or the Nasdaq that were up this much, where you actually had Facebook, Amazon? I mean, listen, Facebook is flat on the day. Amazon, all right, down on the day. Google sustained us in this trading session. I mean, Microsoft, for the most part, is flat on the day. Boeing is off by the tune of almost 1%. Walmart, flat on the trading session. Okay, Alibaba, say what you will, but that is a huge market cap, actually down 0.6%. Intel, flat on the trading session. I can go on and on over here all day long about, again, we are seeing a marketplace that is absolutely still displaying some signs of danger. We're not out of the woods yet. Massive market caps are kind of defecting to the downside. S&P futures are all over the place. But be mindful. If you really want to know, is this thing about to break apart? Okay, it's heavily about the edge of the expected move. Trading outside that 3104, okay? If we get just about 5-10 S&P points outside of it, you'll actually see some heavy sell-side activity kick in. Hey, listen. Get in store for Thursday or Friday, which, again, we're going to have some decent volatility trading sessions. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.